This YouTube channel is 14 days old, and it already has better books than most 5-year-old businesses. Tonight I'm building its Bookkeeper, an AI that reads the receipts, splits the shared costs, and hands me a P&L I'd show an accountant. And because this channel's whole thing is proof, the books you're about to see are real, including the part where the revenue is zero. The entire build is one evening. The prompts are free, in the description. Education, not accounting advice. Let's run the numbers. Step 1. Intake. A business generates paper, subscriptions, invoices, per video charges. Mine generates 3 kinds. A $200 a month AI subscription, about $50 of generation costs per produced video, and a $25 music subscription. Everything lands in one folder: statements, invoices, screenshots. Ugly is fine. That's the point of having a robot. One rule from the audit episode still applies. Strip the account numbers. Date, merchant, amount. Total intake time, 10 minutes. The robot does the rest. Step 2. Categorization. The prompt tells the AI, assign every charge to a category, and show your reasoning. Easy ones first. $50 per produced video is direct production cost. It scales with output. Make more videos, spend more money. The books should show that. Now the wrinkle that breaks most side business books: shared costs. My AI subscription powers this channel, and a kids' music channel I also run, and other projects. So who pays? The Bookkeeper's move. It proposes an allocation rule, a third, a third, a third, and flags it as a decision, not a fact. I can override it, but it never splits silently. Same for the music subscription. 2 channels use it, 50-50. And anything it can't classify, like the design subscription that might be personal, goes in the needs a human pile. The audit episode's rule: the AI proposes, you decide. Step 3. The P&L. And this is where I show you mine, for real. July, 5 episodes produced, $250. AI allocation, $66. Music, $12.50. Total expenses, $329.17. Revenue, 0. The channel is 2 weeks old. That's not a confession, that's a baseline. Net, minus $329. My channel is a pre-revenue startup with a burn rate, and now I know it to the cent. At full speed, 3 videos a week, the books say this channel costs about $729 a month to run. That's the number this whole project has to beat. It's on screen forever now. Hold me to it. Step 4. The export. At tax time, the AI rolls the year into totals by category, the shape your accountant or your tax software actually wants. 1 evening of setup, 10 minutes a month of feeding it. That's the whole system. Honesty segment, where it breaks. 1. The AI cannot know business from personal. The coffee you drank while editing is not a studio expense. It proposes, you decide. 2. Allocations are judgment calls. A third, a third, a third is defensible, not divine. Write the rule down and keep it consistent. Consistency is what accountants actually want. 3. This is bookkeeping, not tax advice. When real money shows up, so should a real professional. The robot makes their job cheaper, not gone. The full prompt pack is free in the description. So, my 14-day-old channel has a ledger, an allocation rule, a burn rate, and a break-even number. Most businesses get those after their first tax scare. And you'll get to watch the revenue line try to catch 729 live on this channel. That's the experiment. Last Monday's video parks the money this system finds. Friday, the most famous statistic about lottery winners, which turns out to be completely made up. Education, not advice. Talk to a licensed professional about your situation. I ran the numbers. You just have to start the clock.